Hello traders, how you doing? Hope you're having a great week. Welcome to Institutional Sunday. Very short one this week. Got a lot of stuff going on with my Mrs. Sister's wedding, so I haven't really got time to do a quick one. I haven't had time to research much, but enough as you can see to be the number one fundamental analysis on YouTube by a country mile. So without much further ado, let's get on with it because I want to keep it quite short. So as always, we're going to start with just a quick summary of the week. What a week, right? So much volatility, increased volatility is really kind of the main takeaway from last week, not only for the S&P, for every asset class. Doesn't matter what you're trading. As I keep trying to say to everyone, this isn't about equities only. These factors are driving everything and you don't need to take my word for it. There is irrefutable evidence of that here. You can see all the markets again were correlated last week. Crude oil, the 10-year treasury rate down at 1.35% now. Dollar yen also off at kind of recent lows, 112. And then the S&P as well has been selling off, although not as much, right, as we've seen, and we're going to talk about that. So let's quickly just summarize last week because it was quite crazy. And it may have actually appeared that we had a big sell-off, but we didn't, right? We had a sell-off, don't get me wrong, but we were only down 1% last week. Actually, what the kind of illusion was last week was that the volatility went crazy. So it was up and down 1%, completely crazy, or over 1%, right? Monday up over 1%, Tuesday down almost 2%, Wednesday up 1%, Wednesday down 1%, Thursday up 1.5%, and then Friday down 1%. So just completely probably like being on a ship in the 1500s, right? The choppiest seas ever. Quite scary, right? All over the place, basically. Why was that? Well, there's two competing factors at the moment. I talked about them last week. We're going to talk about them this week as well. So Powell did a lot of talking and I believe was hinting very strongly at a possible shift finally in the Fed's focus from the labor market to inflation. And probably that's one of the reasons that we kind of had the negative reaction overall that we did over the terrible line there over the week. And then obviously with the new COVID variant, lot of unknowns, so the market was a little bit jittery around that. Put those two things together and it was a very, very volatile week. So let's summarize very quickly. So Monday you can see no data of note, market didn't really do much. Tuesday, Wednesday, Powell was talking, and I think that's really what drove the downside, and we're going to talk about that very quickly here. You can see the sort of, in fact, let's do that first, right? So what he was saying and why the market, I think, did react negatively to it is because I think they're realizing Powell is sending a very clear message. So with the new variant, I said last week it would be very interesting to see how members of the FOMC acknowledge it, what their take on it is. And I think he was very clear that yes, he acknowledged it, but rather than focusing on the impacts on the labor market, right, in terms of less people potentially going back to work, etc. He did say that, but he actually focused on the resulting inflationary pressures that's likely to cause, right? Supply bottlenecks, less people going back to work. So again, difficulty for companies to produce inventory because the labor force isn't there at work physically to do that. So can you see? He was focusing a lot on inflationary pressures. In fact, just to reiterate the point, he actually acknowledged that the risk of inflation has risen. It's more broad-based than the Federal Reserve had or the FOMC had initially given it credit for. They felt it was quite focused on some of the more headline areas, and actually he acknowledged that it's more broad-based. So there you go, a lot of focus on inflation in his words. Amazingly, he said it's a good time to retire the word transitory, which everyone's been saying for weeks, if not months. And anyway, he's finally said that. So basically, it's a big acknowledgement that inflation is likely to be more persistent into 2022 which suggests action from the Fed is likely to have to be more focused on inflation. And he also said tellingly that it's very reasonable for them in the following FOMC meetings to be discussing a quicker taper, right? So potentially being more aggressive with tapering the liquidity that they've been pumping into the economy and looking to finish the tapering around about April, potentially earlier than the initial potential target of June at the 15 billion reduction every month. So that is clearly a very punchy signal to the market that the Fed, yes, acknowledges that the new virus, is there, but they won't be focusing on the labor market effects of that virus. They'll be focusing on inflation. So if the market was, I think what happened is the market was expecting a softer approach from the Fed. Oh, new virus, let's be careful. And the Fed has literally, or Powell at least, he's obviously got to discuss that with his colleagues next couple of weeks' time at the FOMC meeting. But it's clearly said that, he personally is more interested in the increased pricing pressures that would lead to, and he is not going to be taking his foot off the gas. And you saw the reaction. Market was down almost 3% over the 2 days, Tuesday and Wednesday. And then Thursday, we did have a bounce back, probably just more of a relief rally as the market was just digesting some of that talk from Tuesday, Wednesday, and recognizing that whilst he said these things, it hasn't actually happened, right? The tapering increase hasn't actually happened. He just talked about it. So we got an increase as the market just had a bit of a relief rally, and then the payrolls number, which was a little bit confusing because we did have a slightly softer number than expected, and you can see that here. Where are we? 210. So a lot softer than expected. Not a disaster. Initial reaction from the market was actually quite strong. I think they were focusing on the unemployment number reaching kind of, multi-month lows at 4.2%. The initial reaction was quite positive, but then I think the market probably, it's very difficult to say, but I believe, and this is why I wanted to talk about what Powell was saying, is that I believe the market kind of latched onto the fact that actually, because this number was fairly strong, it's actually added more kind of support towards what Powell was saying, which is that more reason for them to be quicker with the taper. If it's a strong number, it's a strong job market, no reason not to push ahead with the quick taper. And there's plenty of reasons as well why there's nothing wrong. Nothing's really changed. We've got this new virus, but hasn't really impacted any of the economic data as we saw. We had a strong manufacturing number, which, to be fair, doesn't necessarily include the effects of the new virus, but you can only react to the data in front of you, and the data continues to be very, very strong. So look, all in all, I think that the market, a lot of people were saying, hey, we had a massive sell-off. We didn't. Okay, that's the point. We're only down 1%. The thing is that volatility increased. Part of the downside was because of Powell's comments, and the market has obviously interpreted that the Fed will now potentially be keeping their foot on the gas when it comes to tapering. What else did you want to talk about? Just very briefly, in fact, that was really it for the last week and almost done. Just wanted to reiterate the fact that the virus is definitely still in focus, and we saw that as all the markets are still correlated. So clearly it's a global cause that's causing a lot of the movement in markets recently. It isn't asset specific to equities, to FX, to this, to that. It's something that's affecting everything, and therefore clear evidence that that is the virus. People are thinking about the virus and its potential impacts across the board in the world economy, because the world economy, when that's affected, affects everything, right? You'll see spillover into dollar yen, into treasuries, into crude oil. So that's what we saw. If you look at the last 2 weeks, last week I mentioned, we had this very correlated effect. Can you see it's just continued? All the markets are off. And that's why I think there will be a relatively subdued tone going into next week. I don't think we're going to see massive sell-offs next week, if I'm honest with you. I'm going to put kind of myself out there a little bit, because if you actually look at, I mentioned we're only off 1%, and I talk a lot about this 5% corrective level that is still very, very reasonable, right? Because we're only 3% off the highs. So you can see the equity market is still very, very strong. Why is that? Despite this new variant, why is the equity market still strong? Well, interesting chart I found that we can have a look at. If you look at the equity market here versus COVID cases, right, and when the World Health Organization has declared either the COVID-19 when it first came out, a pandemic, or the subsequent variants have been officially kind of defined as variants, we can see the equity market really has shrugged it off, right? So yes, there was an initial reaction back when COVID-19 was initially announced, but the point is, why is the market so resilient, even in the last week, only down 1%? We're better prepared now, right? And that's the point. If you look, when we first had the pandemic, obviously there was a lot of unknowns in terms of death rates and vaccinations, and how will businesses be able to cope. Well, they coped very well over 2020 and into 2021. So the market has much more evidence now. Businesses have adapted and they're doing okay. In fact, record numbers, right? We've seen in terms of profit growth. We're also better prepared in terms of having the vaccine and more science out there, etc., etc. We've also got household savings, right? Very, very high savings, right? Because people have been they've been going out for the last year and a half, so the householder balance sheets are so strong, so they'll be able to absorb much more of any sort of downturn in case of this new variant being more persistent than hoped. And then finally, the underlying fundamentals are very, very strong, right? And we've talked about that a lot. You can see that not only in the economic data, but ultimately what drives markets is the ability of the asset you're buying to produce cash, right? Because ultimately that's what you're trying to capture. And if we look at earnings per share, earnings are the long-term driver of equities. Solid, right? And expected to continue to be solid. And we've yet to see the effects of the new virus in any of the numbers. I'm not saying that can't happen, but at the moment it hasn't. So no reason for markets to be selling off like crazy. So whilst I think that there will be some softer tone to the markets, etc., etc., I'm not expecting a crazy sell-off or anything in the next week or so. I think the market's going to be, and that's final slide really, talking about the week ahead, next couple of weeks ahead. I think next week there isn't anything that I'm really going to be focusing on. We already know CPI is persistently high, and like I said, the Fed has already acknowledged that, so I don't think that's going to be market reactionary news. I think the following week we're going to have the FOMC, and that's really what the market will focus on. So next week I think will potentially be quite a subdued week. If anything, I expect the market to be fairly supported. I'm not expecting massive sell-off. I could be wrong. Obviously other markets could go completely crazy. We saw that with the correlation. If crude oil equities, crude oil, dollar yen, and so on and so forth completely start tanking, it might have a bit of a drag effect on equities, but I don't think that that's going to be the case. I think we're going to see fairly subdued week next week with the lack of data, and then really the following week is the one where I'm going to be more concerned about. So it'll be interesting Institutional Sunday next week. Hopefully that was useful. Click the button to subscribe. Can't wait for next week. Have a great week. I've got a fantastic video on Shiba Inu coming up, so don't miss it. See you later.